Hi everyone, this is Vinny with a gold and a mining update. Hope you're doing well. So I got some emails yesterday and today about what my thoughts are in regards to the gold price action, and so I figured I'll do an update. I wasn't thinking about doing one, but I figured I would, especially since I probably won't do another update until mid to latter part of November. Before I get into the current price action, if you recall that in my previous video I stated that gold is in this consolidation pattern, this pennant-like pattern, and I stated don't trade this until it at least goes past this line or this, the bottom of this candle, because there's going just to be a lot of indecision here and it's not worth trying to guess at where gold's going. On September 30th, in the comment section of my previous video, I stated to watch out for a break, and I had bearish to neutral like sentiment at that time, and it just so happens that a day after that we did get a breakdown. Prior to that, I did state that in order for gold to sustain this intermediate uptrend, now as we all know, the primary trend, regardless of what your thoughts are regarding gold, regarding if you like it, you don't like it, your fundamental reasons, or what have you, the primary trend is down. I mean, it is what it is, right? The primary trend is down. However, we do have an intermediary uptrend, and in order for this uptrend to sustain itself, it could possibly do this, do that, and do that, of course, and it could kiss this 200 moving day average. And there's nothing wrong with retracements, and in fact retracements are very healthy. However, what's going on this time is we do have a lot of selling pressure. Now, I stated in the previous video that we do need to stay above the 1275 1276 region, and we spiked down to that and then we bounced off from it. Now on October 2nd, in the comment section, I did state that, well, we had a bounce, but this bounce needed to be a little bit more powerful. And on October 6th, after seeing especially this candle right there, I just wasn't really happy with it. And so I felt that this is very weak in regards to the bulls right at the moment, especially with all the things that's going on with the debt ceiling and this being in an intermediate uptrend. This should have had a little bit more force. I can understand with these two candles being indecision, it could mean it's a continuation / sideways stair-step pattern, but this candle was just horrible. And that told me that this downtrend, this pressure from the bears, is probably going to sustain itself. So those were my thoughts regarding gold on September 30th, October 2nd, and October 6th. So basically now I'm going to discuss both the bullish and bearish point of views, and I would love to know your thoughts. You can tell me how you feel about it, which one's stronger, in the comment section. I'd love to hear it. So regarding the bulls, what they would say is that, well, it really doesn't matter how many times it touches this line, because as long as it's above the 61.8, this is still in an intermediary uptrend. So it could go like this, it could bounce up, it could bounce here, it can go like this, and then it could shoot up. And maybe it can form some type of a double bottom here. So that's basically what they're going to argue. Also, what they're going to argue is that, well, they see an inverse head and shoulders pattern forming. They say, well, this right here is the head, this is the left shoulder, and the right shoulder is forming right now. So what they're going to say is that, well, it could go like this. And they'll argue that, well, this is the neckline right there. And so, we would have to get above 1380s to even make this as a possibility for then the target then to be around mid to upper $1,400 region, at least a kiss to the 200 moving day average. So those are the two reasons I think for the bulls. They don't really have too much ammunition at this time. I think the third would probably be regarding all this news about the debt ceiling and just this government shutdown and all that junk that's happening, all that rubbish that's going on the Hill. So those are the three reasons. In regards to the bears, they would say as follows. First off, they would say, well, there is a crap ton of resistance here. You got the 21, you got the 100, you got the 50 moving day average that will offer a lot of resistance, and then you've got this resistance at this long candle right here. And so the bears will also argue is that the best indicator is price. It's not news, it's not fundamental reasons or anything like that. For the short term, it's price action. And so what they will say is that, well, yeah, sure, okay, this uptrend was pierced by this long bearish candle, which was probably over exaggerated, and this candle made up for it. However, not too long thereafter, we had this indecision candle, and then we had a confirmation candle. It wasn't as if there was another indecision candle and then it ripped up higher, but in fact, we had this negated when we had this indecision candle and then followed by a long bearish candle. Also, they would say, well, they tried to go up, but it formed some type of a flag, and you could also say in this pennant-like consolidation pattern, it broke to the downside. And so they would argue that right now there's a lot of selling pressure and that the bulls really haven't made any type of progress, and any type of progress that they've tried to make, it's been shut down here, here, and over here as well. They will state that, okay, sure, that it hit the 61.8, but look at the bounce. This bounce is basically the 61.8 of here to here. So it's more of a dead cat bounce. And look at this candle, previous day candle. Technically, this is today's candle since it's 8 o'clock Eastern, but look at these two candles. And look at this volume. When the bulls had control, look at this. Look how horrible this volume was. So, and this is the reason why they're getting this bearish to neutral sentiment, is due to the reasons that I just stated. It's only that we have this downtrend right here, that it is having a lot of resistance. It's spiking up now and then, but it's not able to pierce it. The moment this is pierced, that's when bullish progress starts. But so far, it hasn't done it. And what I think will happen is it'll go like this. And then we'll have a breakout. Now, the bears will say, and this is what I argue, is that we are in what's known as a descending triangle formation, which is a continuation pattern, or it could be a reverse pattern. In this case, because it's in an uptrend, this is going to be more of a reversal pattern if it does not break this downward trend line. So it may go like this, and it may just break down. Usually with a descending triangle, it's more of a continuation pattern, and it usually happens in a downtrend. So I guess you can say, well, regarding a primary downtrend, it had this a little bit of an upward move, but now it's having a descending triangle, and so the trend will just continue lower. Now, I'm not saying that it's just going to go down and that's it. Recall on one of my recent gold videos, I stated that regardless if this is a bottom or not, I am expecting a retest of the lows. So if it is correct that gold does not pierce this line and it goes down, expect targets such as 1250 and some of these lows to get retested. And then we'll have to go from there. So those are the bearish reasons. And also regarding all this news about the debt ceiling and government shutdown, we really didn't have any type of bullishness that we're used to from gold. So it shows that the bulls really aren't there. Okay, so those are my reasons. And one last thing, in regards to the inverse head and shoulders, I'm going to argue, and this is just me, and I could be totally wrong here, but I'm going to argue that the inverse head and shoulders is actually this. You got the left, the right shoulder. This is the head, and that the inverse head and shoulders has already been completed right here. So let me show that real quickly. All right, and if we project that up, now this is the first leg, and then over here will be the second. So let me just do the first, and bam, it's done. It's finished. Yeah. And if we do the second leg, which is right here, it's already completed it. So in my opinion, the inverse head and shoulders is already completed. So as far as a bullish argument of this being a head and this being a left shoulder and this being a right shoulder, gold will have to at least surpass 1380s for it to even go to 1450 to the upper 1400 region. So right now I do have a bearish perspective. I do feel that there is a lot of bearish pressure here. Volume is confirming it. A lot of things are confirming it. So we'll see what happens. One last reason before I move into the miners. So as you know, we are in a primary downtrend, and a lot of this has been below the cloud, below the Ichimoku cloud. And one of my videos, I made a strong argument that I felt that gold would go into 1400s, and we did just that. We surpassed the cloud, and now for the first time, we are now seeing price action trading below the cloud. Now, again, you know, the best indicator, you can have as many indicators as you want on the chart, but the best is price. But this Ichimoku cloud indicator is just confirming all the things I stated from a bearish argument, from a bearish perspective. A nice long candle. You know, this isn't one of these spinning top type of candles. This candle tells me there's a lot of selling pressure here. And sure, we had some support at the bottom of the cloud. We just had a nice, gorgeous, long bearish candle. What we might have is either a flag or a stair-step pattern and continuation for the downside. But again, the 1276 level is a level to watch out for, because if that's taken out, then the descending triangle will play out. And the only way that the descending triangle will not play out is if this downtrend is pierced, if it goes above it, and we have some strong momentum. But at this time, I do have a bearish to neutral perspective on gold. Let's quickly move on to GDX, the miners. Okay, so regarding GDX, you know, from a price perspective, we had this decent uptrend, and this right here just broke it. Long bearish candle. Then FOMC, we had this nice green candle. I was expecting some type of a retracement, which we got right here. And then I was expecting this to go up. However, that did not happen. We had lots of selling momentum. This is a red flag. When you see this candle, you should not be bullish whatsoever. You should have been stopped out if you were buying, if you had the speculation that we would either see a stair-step pattern or a retracement of some sort and then move to the upside, and you should have been stopped out. If you're still holding miners right now, I would be very careful, okay? Because you had one indication here, and then on top of that we got this green candle, and that just got pounded by these red bearish candles. So what are my thoughts right now is that we've got this interesting falling wedge type of pattern that is bullish in a sense. However, it's not that bullish. I say this because the wedge is very small. So what you're going to do is just take the distance from here, and if and when this breaks out, you're just going to project this length up to there, and that's going to be your target. Now, it doesn't mean that that's going to be the top. It could also go a little bit higher, but for me, how I'm going to trade it is, let's say for example this passes right here, then you just project this up there, and then that will be a target, maybe 30ish region, depending on where it breaks out. I'm not really too keen on the miners at this time, to be honest with you. It's not that great of a trade setup. I am short at the moment. I do have puts on the miners, but it's not that great. You know, usually I'm used to seeing huge momentum like this, gaps, you know, and this is just, I'm not seeing that. This is just weak. And so it does tell me that even though gold is in this bearish formation at this time, the miners, because of this harsh sell-off, you know, it had a lot of harsh sell-off because of this market and the news regarding the debt ceiling by hedge funds, that it might be getting worn out. Now, it is possible that we might see the lows here be tested, but remember, you don't want to go long on miners until you see some type of a bullish candle pattern. Okay, because the last thing you want to do, trust me, is to pick a bottom. You do that, you're going to get creamed. You know, you're going to get creamed. You want to wait for a nice green candle. Wait for a retracement and then get in on the retracement rather than try to guess at where the bottom is, because it's really not worth it, and then go long from there. So regarding miners, I am bearish at this time. I do not think that the miners have bottomed. So we had this large bearish candle. We got the spinning top with high volume. Today we did not get a confirmation candle, so what I'm expecting is more downward pressure until we get some type of a nice green confirmation candle, and then a retracement. I think at that time would be a great entry for some bullishness. And even for the bullishness, I'm not too keen on it, to be honest with you, unless if there's some kind of activity that shows me otherwise. Okay, so that's my views on metals and miners, and you know, we'll see regarding metals if we get a breakdown From the 1276, I'm looking for target 1 to be in the 1250s, and then a retest to the lows, 1200 and 1179. Looking for some type of bounce in that region, and then we'll see how that momentum plays out. But I should be having another update probably mid to latter part of November, so hopefully this gives you a little bit more perspective on what's going on with gold and miners. Hope you guys are having a great day, and we'll see you on the next update. Thanks.